as we start.
Yeah.
You there?
Yeah.
Oh, okay, cool.
We're all here. We're just waiting for everyone to enter. We're just letting them in. Greetings, hello everybody. If you are able to, even if it's just for a little minute, throw your screen on so we can put eyes on the people and people can put eyes on you. That would be fantastic. Understand not everyone has great quality internet, particularly if they're working from home or regionally or wherever you may be. And if you can't keep it on, that's fine. But if you want to just throw your screen on and say hi, and if you don't want to or you can't, that's okay too. But great to have you here. We're expecting a few more, but we are not going to wait. We're very prompt at the ALMBC. So firstly, thanks for coming. I just want to acknowledge the country that I'm on, which is Kabi Kabi country, and the country that you're all on wherever you are today, and also acknowledge any of our participants who are First Nations as well. We are very grateful and lucky to be part of a live music industry here in Australia, where we have strong, long and ongoing ties to culture and song and community. Just a quick one, I don't know if everyone saw, but October the 14th is the date of the referendum, was announced about 10 minutes before this came on. So, you know, strap yourselves in, get ready for a wild ride. More on that at Big Sound for those who are coming, and for those that are not able to go to Big Sound, we are making sure that we have our forum that we're going to be doing on the Tuesday afternoon from 2 to 4 will also be available for people to jump on via the Zoom link registration that you would have received in your newsletter. And again, for those that came late, if you'd like to throw your screen on and give us a wave and say hi, you don't have to keep it on. Nice if you do. It's always nice to see what people are up to. So welcome today to this panel. This one of our ongoing monthly business forums. This time round is Strictly Legal: How to Run a Tax-Effective Business. And we are very fortunate today to have, in reverse order of speaking, Emma Brophy from Generate. Hi, so if you can give us a wave, Emma. Emma is an accountant with Generate that has history in running a record store and a live music venue in the little town, hamlet of Thirroul, and also works closely with music industry organisations such as our own, Music New South Wales, and a number of others. Second in line, Jen Tuddy from Studio Legal. Not only is our organisation's lawyer, thank you very much for all of your help in helping us get set up in the beginning, but has been working as a lawyer, both running her own practice and working with others, very heavily and deeply engaged with the dance sector. Does know how to spin the wheels of steel herself. We'll be hearing from Jen around legal and company matters. And then last, but definitely not least, is Brian Smash Clardle, current co-founder of Oztix, set up Media Rare many, many moons ago, has been a band manager, has been a site production manager, has run a record label, has done all the things that you could think of doing in this industry, and he is still here, standing to tell the tale. And also, I should say, a foundation member, one of the heartbeats behind setting up the Australian Live Music Business Council. We're very grateful for Smash's impetus and ongoing input into the organisation. And it was also, funnily enough, for the Strictly Legal how to run a tax-effective business. Our treasurer, I should point out. Smash, over to you. Could you tell us a little bit, a brief history of your story? Oh, yes, sorry. We'll also have Anne McKenna, who is throwing his hand up to point out that I've forgotten to do something. What is it, Ed?
We're just letting everyone know we're recording today.
Ah, yes, we are recording. Smash.
Hello, everyone.
If you could just give us a rundown on how you started and I guess the little kind of potted history of where you are now, where you've ended up, and what kind of business activity structures you've kind of gone through.
I'll try and be quick. It's a long story. I don't know.
There's a book in it, I'm sure.
I'm going to have to do edited highlights, but I think basically everyone starts out as a sole trader, unless of course you just go straight into working for someone. But most of the people in music are fairly entrepreneurial and tend to run their own businesses, I would say. We have a lot of members and a lot of small businesses. So I guess my sort of pitch today is based more towards that. But, you know, I grew up in Sydney. I love music. All my mates played in bands. I couldn't play anything, so I used to hang around with them. In 1977, while I was still at school, a few friends and I organised a dance, what it was called then, at Mossman. It's probably called a disco nowadays, at Mossman High School Hall with, and we got 3 punk bands. We looked up the Yellow Pages and found Harbour Agency, and I booked the Kamikaze Kids plus 2 supports. It was a 3-band bill, including PA, for $500. The contract was mailed to my home. There was no phones or faxes then, or computers. When I told my mates, they asked me, what does PA mean? I said, I don't know, but I'm sure we'll find out. So we got 1,500 payers at $3. It was a riot. The football team got called in to do security. But then after it was all done, our treasurer, who was appointed treasurer, took the money, bought a combi and took off surfing, never to be seen again. But fortunately, one of the dads had taught us about setting up a business. And so my first business was actually an incorporated association, which is like an organization for not-for-profits of members. Needless to say, it was quietly wound up after that. So then I moved to Hobart in 1981, and I learned doing lights from a mate, but I became a sound guy pretty quick after that because there was a lot more knobs to play with, and standing there going like this all night was pretty boring. A mate and I then started a nightclub in Hobart in a disused pub room in 1982. There was nowhere for bunk bands to play in Hobart. It was a lot of fun. We did everything ourselves. We learnt fast, and the club went along okay for about 18 months. So this was probably my first partnership, although it wasn't formalized. It was a split between me and my mate. We sold the club to the PA guy because he was so used to making money by then, he couldn't bear to think we were closing it.
Did you know what PA meant by then, Smash?
I did by then, yes.
Okay, good.
And but bizarre to think that we used to be able to run a nightclub once a week on a Friday night in a pub, all cash, no insurance, no nothing, just crazy. Anyway, that's how it's changed now. You just wouldn't get away with it. After traveling for a few years, I got back to Sydney and I decided to buy a PA system. And see, now I really know what a PA is, Stu. And I bought a truck and I started out as a PA for hire. I borrowed 25 grand at 18% interest back then, not knowing what I was doing. Again, I was a sole trader because it was just me. There was no employees. All the crew worked for cash. I'd get paid in cash every night, pay the crew, pay my loan, the fuel and the maintenance, and hopefully one day make a profit. Needless to say, I never did. And after a few years, I sold that to a nightclub and paid off the loan. But then I started working freelance. And when I found out how much tour managers were getting paid, I became a tour manager. Around 1988, I was approached by a mate whose band had started to get noticed, and then I became their manager. So in between sound and TM jobs, I was all of a sudden hustling the record company and trying to get gigs and learning about booking agents and stuff like that. I realized pretty quick there wasn't really any money in this caper until the band became a lot bigger. It's actually where I coined the phrase, band management is underpaid babysitting in the hope that it becomes overpaid babysitting. So
Is that the title of your book?
no, it might be a chapter. So anyway, I decided I better get a few more bands because, you know, we needed volume because otherwise we couldn't make it pay. So I invited one of my mates to join me in a partnership. It was the first real proper sort of business I got into, and we grew really fast. All of a sudden we had 4 bands. Then we decided to start a rehearsal room recording studio for our bands. We rented a warehouse in Newtown. And it was around this time we got our first company. It was actually called Smash Global Network Proprietary Limited. So much humility I
All right,
have.
can I just stop you really quickly? What
Yeah.
year did you set up your first company?
Oh, about 89, 2000, 89, 90, 1990.
So in the late 70s, you were just operating by the seat of your pants.
Oh, well, I was still at school, but in the 80s, I just was all sole trader, just winging it.
Sole trader and then partnership. So you
And
got
then
a
partnership.
sole trader for a few years, partnership for a few years, and then late
company.
80s. So basically less than a 10-year run, and then of figuring out
and
how to actually do the work rather than how to figure out how to run a business.
yeah. So then getting the company, we had managing the bands, we had to get an accountant to do the bands tax and all that stuff, and we became mates with this guy who was really good, and he advised us to get set up properly. And you know, we were like, we don't want a company because it costs money to run a company, you know, and got to get your tax return done every year and blah blah blah. And he was like, well, you know, if you get set up properly, you actually can make more claim on expenses than you can now. And I was like, oh, okay, that's a good idea. And so, you know, he was like, you can claim things like per diems and travel allowance and your home office and your fuel and stuff like that. So we decided to go for it, and we set all the bands up in companies as well. And he taught us a lot. He was a really good guy, and I'll never forget him telling me one day, so when do you think you want to start making money, Smash? And I was puzzled, and he said, at some point you have to stop worrying about paying tax and just make the money and pay the tax, and you'll be a lot more successful. And it was great advice. Basically, he was saying focus on the prize, not what it costs to get there, you know. And it's something I've believed in ever since. And so doing the band management went well for years. I was doing I had a side hustle of doing event management. I was running the Livid Festival up here in Brisbane, and then I got invited to run the Big Day Out, and I did the Big Day Out for years, and then did more and more of that. And then, in fact, that event management company, Media Rare, ended up being the reason we started doing all those festivals, was the reason we started Oztix. And then that was 20 years ago when I started Oztix, and that was a company from the get-go. And when Oztix started making some money, we actually got advice to move into to get a personal, like a family trust. And that's for sort of all sorts of reasons, which I'll let Jen talk about. But so really, over the history of my little career, you can see that I've had all sorts of structures at different times. And I don't think there's probably a perfect one, but there's definitely the right one for where you're at financially, I'd say, and risk-wise. So that's what today's all about. Segue. But I just have 3 little quick lessons that I wanted to share with the group. What I've learned over my career is being that accounting is the most important thing you're going to do for your business. You really need to know every month or every quarter how you're tracking. The second thing is, I've learned a big lesson, which is when you do your annual budget, do a budget that makes money. Don't do a budget that breaks even. There's no law that says you have to hit your target, but just having it there as a target actually makes you more likely to hit that target. And the last thing is always get a shareholders agreement or a partnership agreement when you go into business with someone. Very, very important. And don't even start your business until you've got that in place. So thank you.
Well done, Smash. Thank you very much. And I'd like to say that's a rare moment of you sticking to the time. Very good.
Thank you.
You're getting better as you get older, mate. Smash and I have worked together. I've had the benefit of working with Smash probably since the early 2000s on lots and lots of different projects. So I have seen how hard he works and how much he operates, and his current business partner was someone that came to intern with him, and we worked with on putting on youth music projects together. So it just shows how much Smash values the people that works with him as well. Stu Field.
I met Stu when he came as work experience on a Livid Festival.
Yeah.
And he's been my partner for 20 years in Oztix. So, yeah.
It's the anniversary this year. So let's move. Let's move now to and look, we are going to open up for questions at the end. So anything you've got burning or anything you want to ask, please, do reserve. You can throw them in the chat on the way through, and we'll surface them if we think they're relevant to that bit of the conversation at that time. But also, I'd really encourage you to start thinking about the things you want to ask, because we will have some time at the end, but we will stop at 1 o'clock sharp. I will warn you. Rightio, Jen Tuddy.
Okay, cool. Yeah, I'm just going to share my screen.
Yep.
Hopefully, well. Okay. So how does that look, Stu?
Perfect.
Look, perfect.
All right. Thanks so much, Smash, for sharing your story with us.
No worries.
It's a great segue into what I wanted to talk about today. These are the things that I'll be discussing. So we're going to talk about different business structures and their pros and cons. We're going to talk about the difference between shareholders and directors. We're going to talk about key things you can do to reduce your personal liability when you're running a business. Some key things you can do to reduce risk in your business, and some important considerations to ensure that you're into effective contracts with third parties. So, business structures. The old sole trader. So I've just broken down for each business structure what they are, the pros and the cons, and when you should be thinking about using the structure. So sole trader, what is it? Well, it's just a human. There's no separate legal entity other than the individual. The pros are it's cheap, easy to set up. There's limited reporting requirements. The cons are there's unlimited personal liability. Your personal assets are at risk. You're taxed at the personal tax rates, and you can't split the profits with others. When you're going to use this structure, this is sort of when you're starting out, you're not yet making that much money, or maybe you're just testing the waters on your business idea. This would be for the low risk type of businesses. We're looking at a partnership now. So this is between 2 or more individuals or companies, and this is not a separate legal entity either. The pros for a partnership, relatively easy to set up, but you should have a partnership agreement, as Smash pointed out. And there might be some tax benefits for partnerships. The cons, there's actually many cons. It's kind of like marrying your business partner. It's a really serious commitment at law. There's default rules that apply if a bespoke partnership agreement is not put in place. You can be liable for the debts and actions of your other partners in relation to the business. It's really hard to break up, and it's hard to bring in investors to the structure. When you're going to use this, again, when you're working with someone else, this is what you might use when you're just starting out. You're not making that much money yet. Maybe you're testing the waters, but I do reiterate, do tread with caution. A proprietary limited company. So this is a separate legal entity to you personally. The pros here, well, there's quite a lot of pros. It's quite cheap to set up initially. It helps protect your personal assets. You are not generally responsible for the company's liabilities. It can appear more professional. There's lots of tax advantages. It's easy to bring in new shareholders and investors, and you can get access to key government incentives like R&D grants and ESSEC incentives for investors. Some of the cons, it's more heavily regulated than partnerships and sole traders. It's more expensive in terms of accounting fees. the directors certainly have more onerous legal obligations, including what's called directors' duties, and there's more reporting requirements. When you're going to use a company, when you're running more of a high-risk business, when you're starting to make more money, when you've got staff, when you've got personal assets you want to protect, like a home, when you're committed to your business long-term, when you've got business partners, when you want to take on a lease, when you want to distribute income to different people, and when you want to take advantage of company tax benefits. And I'm sure there's a lot more reasons, but these are some of the key ones that I've identified. Joint ventures. This is another one that's quite relevant to the music industry and does come up a bit. So I thought I'd talk about this quickly. A joint venture is between two or more individual businesses or company businesses. Some of the pros, there's mutual benefits to this arrangement, like sharing the risks and the costs. And there's not necessarily a need to set up a new entity, although some joint ventures do still set up a company. The cons, there's still a potential for unlimited liability for joint venture partners, for each joint venture partner's other debts and obligations. So that's a consideration. And when to use. This is a structure you would use for more of a particular project or a business goal. For example, you want to try at a music festival and just, do one event and see how it goes. Often joint ventures have a defined end. They're not some sort of ongoing business. And it's one to use when you want to stay more separate from each other's business.
Can I jump in quickly there on joint ventures,
Yeah,
Smash, and just ask Smash for a little bit of input? Smash, have you done many or any joint ventures? You're on mute.
I think you're still on mute.
He is. You're on mute, Smash.
Mute gets me every time. And it's not because I'm old. I do have several joint ventures at the moment. Because they came later in life, I generally would always set up a separate company for the joint venture, and my company and the other part or other people's companies would all join that company as shareholders. And then we have a shareholders agreement which outlines the various things that you can and can't do as shareholders and what directors can and can't do as directors. So yeah, we have several of these all the time.
Yeah.
And it's a great example, Jen, was like a festival or a music event.
Often used for music events.
Like a project. Yeah.
Yeah. So
definitely.
for specific projects and not for ongoing businesses.
Yeah.
Cool. And just conscious of time, just moving
Yep.
to trusts. So you can have trusts that are like trading trusts. You can also have family trusts that often own equity in a company. But this is in relation to a trust that actually trades as a business. So it's important to know that trusts themselves are not legal entities. They must have a trustee that acts as a trustee of the trust, and they've got beneficiaries who benefit from the trust. The pros, there can be some considerable tax and income distribution advantages. That's more in Emma's lane than mine. It can definitely, from a legal perspective, help better protect assets from creditors if the business goes into trouble, because there's lots of beneficiaries that potentially have claim to those assets. So it's not just okay for the creditors to take them off the business. And trusts can be less regulated than companies. But in terms of the cons, they can be a little bit more expensive to set up, and there's some more ongoing accounting fees. And ideally you should have a corporate trustee. So that means you also have to set up a company and you have all those costs as well. So
what's the risk of having a trust where it's an individual as the trustee rather than the company?
And you've got potential personal liability for that trustee as well. Although the trust will usually indemnify the trustee against any claims against the trust. It's just, it just exposes you personally. So I always recommend setting up a corporate trustee. And when to use this is one you would definitely need to get advice from your accountant and your tax advisors, because there's really good reasons why you should use a trust. Like, for example, if you want to sell your business, there's capital gains concessions, and there's certain types of businesses, like when you're owning properties as a group, you might set up a trust as the trading entity. But again, it's more Emma's lane than mine, but that's just a legal rundown. Okay, what are directors and what are shareholders? Sometimes people can get a bit confused. So we're moving to companies. Companies are pretty common business structure and one that I'm a big advocate of. Company directors. So directors are humans and companies are not humans. Company directors, they make decisions on how the company operates. They have obligations, really serious obligations actually under the Corporations Act called directors' duties. And directors need to be across these when they accept a position as a director. Also recently, directors need IDs, which is a new ASIC requirement, and there's penalties for not having one. In terms of the liability of a director, directors generally, and there are exceptions, aren't liable for the company's debts and obligations. Or they can be though sometimes. So for example, if a company's not paying super to their staff or they're not paying GST to the ATO or pay PAYG, they can be personally liable for those sorts of debts. But just, you know, for example, if a company's just not doing that well, maybe put on an event and it just, you know, it just failed and there's lots of money owing to suppliers, the directors aren't necessarily going to be liable for those sorts of debts, you know, unless they were, you know, insolvently, they knew that the company couldn't afford to pay the suppliers. That might be an insolvent trading issue. And then again, that might be an exception where the director does become liable for the debts of a company. But yeah, mostly directors, if they're on the right side of the law, they're not going to be liable for the company's obligations.
Can I jump in for a sec?
Yeah.
Thanks. The classic example of this is the promoter who sets up a company and runs a festival that doesn't go well. They wind up the company and don't pay their debts and walk away. And unless the suppliers can get together and prove that he or she knew it was going to fail, there's no recourse. So it's pretty hard to get nailed for it.
Yeah, and then there's heaps of, like, this is one of the reasons why directors' IDs were set up. So ASIC can keep an eye on directors who just keep setting up companies that are winding them up. And also there's rules around phoenixing, so you can't just shut down a company and start up a new company.
They should.
So, you know.
They should ask me. I can tell them who they all are.
Exactly, yeah, well, you know, the hit list. Okay, so versus company shareholders. So shareholders, they can be humans or companies. And often shares are held by a trust, and a trustee would hold those on behalf of the trust. So what do company shareholders do? Well, they participate in decision making as well. Under the Corporations Act, shareholders must make some most important decisions to do with companies. They must pass special resolutions. So shareholders also receive dividends, which are like the profits of the company. And shareholders must follow the terms of a shareholders agreement if one's in place. In terms of the liability of shareholders, so they're not liable for the debts of the company, and they don't have these similar like directors' duties like directors do, but they can be liable for unpaid amounts on their shareholding, for example, in a liquidation. So shareholders are pretty protected in a company, and that's why one of the reasons, you know, people should be thinking about setting up companies. Okay, so I've got only a few more minutes, so I'm going to race through these slides. So how can you reduce your personal liability when running a business? So I've got 3 key things to do. 1, to get proper advice. So setting up a business structure is not something you want to DIY. It's really important to speak to an accountant and invest in tax and financial advice at the start. One of my favorite things is to set up a company. If you're operating as a sole trader or a partnership, you really need to be aware that your personal assets are definitely at risk. So you should be considering changing to a company or another type of structure, such as a unit trust with a corporate trustee, to reduce your personal liability. Another thing, if you're working with others, and Smash rightly pointed this out, it's really, really, really important to get an agreement put in place at the very start. And this is something you want to hire a lawyer who's experienced in this area to prepare a robust contract that protects you and that reduces your personal liability in relation to the business. So partnership agreements for partnerships, shareholders agreements for companies, JV agreements for JVs, and unit holders agreements for trusts. Reducing risk in your business. 3 key things to do. 3 takeaways for today. 1, get insurance. So I recommend going and speaking to an insurance broker that specializes in the music and entertainment space, that they are out there, and discuss what you need.
We have 2 that we can refer any of you to at any point.
Amazing. You need to be thinking about professional indemnity, public liability, work cover, cybersecurity, cancellation, business interruption insurance. They're the key ones for the music and entertainment industries. Another thing, follow best practice. So educate yourself on what best practice looks like in your industry, or your niche part of the entertainment music industry, and take steps to implement this in your business. And create policies and procedures. So if you have well considered and clearly drafted and communicated policies and procedures, this will help you meet your legal duty of care when you're running your business, and will help reduce risk. For example, you should be having policies on privacy, sexual harassment, discrimination, work from home, social media, OH&S, and way more. Okay, last thing I want to talk to you about today is how to enter into effective business contracts. Again, I've got some key considerations. So get it in writing. Relying on an oral agreement or a handshake deal, it can go terribly wrong, and we see that all the time. So clearly define scope, delivery dates, fees, payment terms, and other key terms in writing. Make sure you know who you're contracting with. This is often the case. So you don't want to just sign a contract with a business name as the contracting entity. You need to have the exact company name. If it's a partnership, you need the partnership details. I recommend putting the ABN into every contract that you sign to make sure it's really clear who you're contracting with. And also, just as importantly, make sure the person signing the contract has the authority to sign. So if it's a company director on behalf of the company, make sure you understand what you're signing. The devil really is in the detail with contracts. So don't feel pressured into signing something you don't understand, because that could go really badly for you. And finally, I recommend investing in your own templates. So rather than signing other people's contracts, get your own contract prepared. Get a lawyer who knows what they're doing to prepare a template for you. This is going to save you time and ultimately best protect you and reduce your risk. And that's it from me. Thanks.
Thank you so much, Jen. That was fantastic.
Yeah.
No
worries. I'll
Can I jump in?
Yeah, jump in, and then we'll go to Em.
Yeah, thanks. Thanks, Jen. Yeah, on that ABN thing, at Oztix now we have a rule. Whenever we do a deal with anyone, we always go to ABN, look up home, and do a search and check the ABN, and then we also go to ASIC and pay the $18 and get the company search, and it tells you who the shareholders and directors are. So that way, we just do that as pro forma now, because it's only $18 investment and 5 minutes work, but it actually makes sure you know who you're contracting with, and you'll be amazed how many times people send the info through, and then you go, but hang on a minute, you're so-and-so's the director. You're saying you're the director, but you know what I mean? Or lots of different, your registered office isn't updated, or all
and
that sort of
classic.
stuff.
Yeah, classic. Like, you will get people saying, "Well, my general manager didn't have authority to sign that contract, so I'm not bound, and I'm not paying your invoice." Like, it happens all the time.
That's it.
Yeah.
So you need to get the director to sign the document, not just someone who wants to.
Is duly authorized by the company. It can be a director, it might be someone else, but again, it's case by case.
Yeah, cool.
Probably gives you a bit of insight too, Smash, in terms of what kind of operation you're looking to do business with, if they haven't kind of cleaned up all of their admin back end as well. You get a little insight quickly.
Oh, it's interesting to see who the shareholders are. And,
Okay, we're going to throw to Emma now.
Cool.
Emma, I believe you also have a screen to share.
I do. Give me one moment.
We're really getting professional nowadays, aren't we, with these things?
Yeah.
Absolutely. One moment. Here we are. I'd just like to apologize in advance if you can hear any noises in the background. They've decided to, the people are whippersnipping, when they've just decided to do it at this particular moment,
It's
which
the
is
general
incredibly
rule.
convenient for everyone.
It's the general rule, Emma, as soon as you start to do a Zoom presentation, that there will be construction.
Absolutely.
Equally, I have
Absolutely.
the same problem.
Cool. Alrighty. So, hi, I'm Emma. So I'll be talking more about the accounting side of things. I'm going to try and get this to work. There we are. Alrighty. So, all right, and everybody can see everything absolutely
Yep.
fine.
Perfect, looks great.
Fantastic. Alrighty, so today I'm going to be discussing with you, like I said, some accounting things. We're going to talk about managing the cash flow for your business. We'll be talking about deductions, what's deductible and what's not deductible for businesses. We'll be talking about your super obligations as well for contractors and for employees. And we'll talk briefly just about what's the best practice for bookkeeping and record keeping. So to start off, we'll talk about cash flow. So you've all heard it a million times before, but it really is true. Cash is king. In order to set up a good budget for you, like in order to be successful in business, oftentimes you have to set up a budget yearly and really try and stick with it. What we often find is that, you have expenses in your businesses that are fixed every month or every year. So you have your phone bill that's always going to come out. You've got your insurances that are always going to come out at a certain time of year. You've got employees that you've got to pay every fortnight or so. Oftentimes we can't do anything to reduce those costs. And we think to ourselves, why am I losing all this money? How am I going to make some more money? So knowing exactly when these expenses are coming out and then being able to recognize, okay, I am in January, I know it's going to be quite quiet. So, let's see if I can move this expense to the next month, or realizing, I've got, lots of things coming out this month. I need to make more money. That can be a really valuable tool for businesses. Like I said, oftentimes you've got fixed expenses and there's not much you can do about it. So you need to think, okay, how can I make more money? And a budget is a really useful way of helping you achieve that goal. You can just do that in Excel by just taking, okay, I know when these are coming out, let's, and then, just choosing a goal of sales that you want to make for that month, for example. If you know that you're going to have a busy month, say, okay, I know last year I made, $100, for example. This year I want to make $150. And then that'll help you be able to figure out, okay, how am I going to make that work? Smash, do you have any input on budgets and stuff? I know that you've, quite a fan.
Yeah, we're a big fan of budgets. We took us, well, like I said, many years to get proper and serious. As you get budget, as your business gets bigger, you get more resources so you can do more things, obviously. But like starting Oztix, I think about Oztix, we hold everybody else's money. So when we started it, I was like, okay, the biggest risk of this business is if something happens to the money. So we've got to be completely 100% on top of this when we start this business. So the first appointment, the first person we hired was an accountant to come and sit in the office. And very important, because when you're messing around with other people's money, you can't, and somebody gets word that something's not right, that's the end of your business when you're a ticket company. So we were very determined to have very fast settlements. One of the biggest thing people whinge about ticket companies is how long it takes them to pay you your money once the show's over. So we started out going, well, we'll pay within 2 days. And we still do 20 years later. And everybody loves us for that, because it's done and dusted usually within 24 hours. And that sets your business up to be, how good are these people? They don't muck around. You get a reputation for being financially very astute, and, it grows business. So I just wanted to chip in on that. Sorry.
Yeah, no, absolutely.
Thanks.
Another key thing to remember is making sure that you're issuing invoices regularly. So if you're doing a job for somebody, for example, and it's a 6-month contract, perhaps instead of invoicing right at the beginning or right at the end, issuing invoices in consistent chunks so that you've got consistent cash flow coming through. That way you're able to save yourself, if you issue a huge invoice at the start of the job, by the end of the job, sort of resources dwindling and whatnot. Or even if you're at the end and you've spent all of your money and you're like, oh, I know I've done 5 months worth of work and I haven't received any money for it. If you issue invoices regularly, that can sort of mitigate that risk. Another big thing is to stay on top of compliance matters. So I'm a tax accountant, so I'm going to bang on about the ATO and about super. There are always things that are going to, that are going to come out, and within your budget as well, you can account for them. So for example, if you're registered for GST, that you've got to pay the ATO, the GST. So you can, within the Excel budget, you can pop a formula in to be like, oh, okay, well, I know that this outgoing, 10% of my sales is going to go out to the ATO, and you can get all of that in your budget in the first instance. Because oftentimes I find that with a lot of companies is that, a lot of businesses rather, is that they make their sales, they pay their suppliers, but they don't remember to keep 10% for the ATO. So that's something always really to keep sort of in the forefront of your mind. Last thing is that don't borrow money from your company. So this is a big thing with the ATO. They absolutely hate it when directors or shareholders borrow a sum of money from their company and either don't pay it back or pay it back without interest. It's what we call Division 7A, and I won't get too far down the road into it, but if you're withdrawing money out of your company and it's not a wage, consider not doing it, because there are potential tax implications that are pretty annoying for doing that. All right, the second sort of part of the cash flow is what I find really helpful is, if your bank allows you to just set up bank accounts without any extra fees, do set up multiple bank accounts within your bank so that you've got different savings accounts for different things. So, oftentimes, like I said before, you've got certain bills that are coming out at certain times. Put that money away once you receive the invoice into an account. So, okay, it's there, I can't touch it. Same with GST. If you're being really conservative, you could say, alrighty, I've received a $1,000 invoice. I know that 10% of that is going to go to the ATO. So you just put 10% of that away into the GST account. And then, obviously you'll incur expenses throughout the year. So the 10% is really conservative, because what you'll actually end up giving to the ATO will be less, because it'll be offset by the GST you've paid on those expenses. But you'll never get yourself into this situation where you are, scrounging around for this 10% GST to give to the ATO. And if you're being really super great, especially if you're a sole trader as well, if you've got a savings account for income tax, that's really, really helpful, especially for sole traders where, you might not be paying pay-as-you-go installments. The tax doesn't get your invoices don't get taxed until you lodge your tax return. And I've seen time and time again when, you work throughout the financial year, and then, 6 months, 8 months, 9 months later, you actually go to lodge your tax return, and all that money that you've earned, you've spent it. You've spent it on other projects, you spent it on, living your life or doing it whatever you want to, but you forget that, the ATO actually need to are entitled to a bunch of this. So if you, especially for sole traders, if you can put something aside, estimate 30% odd, is a good sort of starting point, then you can, you've got that savings away, and then if you've got to pay a little bit more, at least you've already got some there. If you've got your savings account and you get a refund, you've just saved, and you've got some interest, we hope, in your bank account. So that's really great. Next up, we'll talk about deductions. So this is the real nice, juicy bit, I think, that everybody would be quite interested in. Without going through a huge list of like, okay, you're in the music business, what's deductible, what's non-deductible? Because especially in the music business, a lot of things can be quite grey. What I always like to think is, was this expense that was this thing that I bought necessarily incurred for me to carry on my business? So the ATO always need what we call a nexus between the income and the expense. So these are going to be things like, if you are a musician, for example, you play guitar and you purchase a new guitar, and you earn money as a session musician. You need that guitar in order to earn income as a session musician. Therefore, it's deductible. That's totally fine. All sorts of equipment, like computers, software that you need for like Ableton and all that sort of stuff. Certain like subscriptions as well. If you have an accounting software, if you've got Adobe potentially and you use Adobe very regularly in your business, crucially, you are using it in your business, a lot of those subscriptions are deductible. I know Smash talked about before, travel deductions when you are a company or even when you're a sole trader. If your work sends you interstate for a job or so, and you've gone interstate to perform a particular job, and then you come home, those airfares may be deductible. There are, certain meal expenses that could be deductible. Your dinner, if you were staying overnight, could be deductible to you. If you're purchasing, coffees and lunches for crew while you're out working together, in the studio or something, that may be deductible. Certain reference materials, and this is where we start to sort of get into the gray area, but we're all, we're musicians here. We listen to music for inspiration, and that inspiration helps us earn income. In certain circumstances, subscriptions such as Spotify, Apple Music, Netflix, even maybe depending on what sort of music you're composing for example, could be deductible. You've always got to bear in mind, especially with the things like Spotify and Apple Music, about, okay, how much is this actually for my work and how much of this is actually for my private enjoyment? For example, if you're just listening to music while you're typing something up, that's probably just private. But if you're sitting and you're listening to something so that, because or you've downloaded some music because that you like the way that something sounds on this record and you want to try and emulate that on something else, then, there could be scope there to say, yep, it's a deductible expense. A big exemption is basically entertainment. So often we find with businesses is that, and as a necessary part of them performing their business, is that they incur entertainment, which is basically when you take a client out for a meal somewhere at the pub or at a restaurant, and you and a client go, because that's been incurred outside of your office, the ATO view that as entertainment and non-deductible. There are certain ways of getting around it, such as if you're paying fringe benefits tax, which I won't go down that rabbit hole right here. But yeah, good thing to notice that if you're taking a client out, or if you're taking yourself out just for a meal, you're not while you're working from home, you're not interstate or working overnight somewhere, you're just doing that, it's unlikely to be deductible. Ooh, pardon me. There you go. Alrighty, and so with record keeping for these deductions, you need to keep a record of like a tax invoice of the expense for 5 years. This is what the ATO say. They can always do a random audit on people, and they do pick, randomly, they just sort of go and will pick a whole bunch of people just to check their deductions and their tax returns. The ATO requirement is that you hold on to your tax invoices for 5 years. It doesn't have to be physical, it can be digital. But oftentimes a bank statement isn't enough. You need to have a receipt that itemizes everything that you've got on there, how much it cost, and keep that on file, whether that be physically or digitally, for 5 years after you've lodged your return. Alrighty. So next up is super. I'm not sure how familiar everybody is with the super obligations of people and whatnot. I know that the Live Music Business Council has prepared a seminar on this, but
I've just also circulated that flowchart that you did with Music New South Wales as well, which is
fabulous. So superannuation.
In the chat, everyone, in the chat.
So superannuation is paid not only to employees, but to certain contractors as well. The Superannuation Act has a different definition of an employee. If you have a look through the flow chart or the ATO superannuation decision tool, it really clearly goes through, it can take you and your circumstance and see, okay, do I need to be paying this person super, or should I be getting paid super? But if you've contracted somebody to perform a specific task at a specific rate, it'll be like, produce this song for me for $1,000 random, for example, you might owe them super. Now, super is only payable to sole traders. So entities such as partnerships, joint ventures, companies, trusts aren't owed super. So it's always really handy if when you're going to pay someone, check the ABN lookup, see what their ABN is, and you'll be able to see what sort of entity they are. It's due 28 days after the end of the quarter. So the quarter's ending, 31st of March, 30th of September, 30th of September, and 31st of December, and 30 June. I don't think I said 30 June. The 28 days after that, the super needs to be paid and received into the contractor or employee super fund. For this current financial year that we're in, the superannuation rate is 11% on the exclusive of GST price. So if you've received an invoice for $1,000 plus 10% GST is $1,100, you pay superannuation on the $1,000 amount. And like I said, when in doubt, refer to the ATO decision tool or to the flowchart and keep a record of the outcome. If at any time, if you've determined, oh no, I don't need to pay this person any super, pardon me, if you've got a record of that and how you got to that record, then you'll more likely be covered when, there's an ATO audit.
And just to be really clear, because some people are issuing invoices with their super as a line item on it, that's not acceptable, is it? It's actually they can't pay the payee the super and expect and say, well, my
That's
obligation
correct.
is done.
Yeah, it's the person, the person who's got the contract, it's their obligation to pay the super. You can't pay somebody an extra 11% and say, oh, this has to go to your super. It's also worthwhile noting that you can't contract it away. You can't say, like, oh, I'm going to pay you an extra amount and you've got to pay it into your super yourself. It's not possible. The ATO will really have an issue with that. The ATO will also really have an issue if you've got lots of super that you haven't paid to employees or contractors and it's sitting on your accounts for ages and ages and ages. They really, you can become personally liable to pay that, and there can be some really significant penalties. So when in doubt, refer to the ATO decision tool, not only for people that you are contracting, but for yourself as well. If you think, oh, maybe I'm a sole trader, maybe I need super paid for me.
Yeah.
And finally, bookkeeping. So how do you keep all your records in order? In the first instance, it's best to get yourself a nice accounting, like a good accounting software. We at Generate really like Xero. We find it really easy to use. I'm not going to do a big ad for Xero, but we do quite like it, rather than just keeping an Excel file. If you're getting to a stage where you're either, just really time poor or you really absolutely have no idea what's going on, it's worthwhile outsourcing to a bookkeeper or to an accountant and, paying them, a certain amount each month or each quarter to help you with your BAS and help you with other things as well, just so that you can focus on doing what you do best, which is, either making music, producing music, putting on events, all of that sort of stuff. And then you've got somebody on the other side who knows exactly what they're doing and who can, raise things for you that you might not have, thought of in the first place. Obviously, it's very important for business owners and business people to have financial literacy themselves, but it's better to have somebody on the outside helping you with your business rather than keeping everything in-house and then drowning in all the paperwork and in ATO compliance. Staying on top of it is also really, really important. There's nothing worse than getting to the end of the financial year and you're going through your bank accounts to seeing what's deductible and what was income and whatnot, and not remembering exactly what happened throughout the year. Like how could you? So it's great, if you can do, once a month, or, find a time that's going to work for you, pop it in the calendar and say, okay, I'm going to do my books today. I know it's going to be annoying. Get a glass of wine, get a beer, get a non-alcoholic beer, do, get whatever, and just be like, okay, today's the day, this is what I'm going to do. And then if you stay on top of it regularly, it's going to be much less of a pain during tax time. It'll be much less of a pain for you. It'll be much less of a pain for your accountant. And the final thing is that trying not to mix your personal expenses with your business expenses goes back to what I was saying before about, not deducting, not using company funds for your own personal things. Try and keep things as clean as possible. If you're a sole trader, have a bank account that's for your sole trader business that you don't touch, unless you need to withdraw money, you've made heaps of money and you're going to withdraw it to your personal account and then go from there, sort of thing. If you can have everything nice and clean and separate, it's going to make everybody's lives easier, essentially. So yeah, that's the end of my presentation.
Awesome. Thanks so much, Emma. We have 5 minutes of questions for people, and I will give you roughly 10 seconds to ask one, and then I will start asking questions. So has anyone got anything that they would like to ask? I'm not even going to give you 10 seconds. Just throw your hand up. Go on then.
Any good tools? You've got Xero. Any other great tools that might be good for record keeping?
I've gotten ads just in my own personal life for a software called Henry, HNRY, I think. Yep. That's apparently quite good. They have a sort of structure where, they take their fee as a percentage of your income earnings, but that's all just sort of within its own software. You don't really get to talk to somebody sort of face to face. MYOB is another accounting software that a lot of people use. QuickBooks is another accounting software, but not to sound too much like of an ad for Xero, I think Xero is the cleanest, the prettiest, the most user-friendly.
If I can use it, pretty much anyone should be able to use it.
Yeah.
I use a tool that my bookkeeper gave me called Dext, which is super brilliant, and it just allows me to take the photo of the receipt at the time instead of actually putting it in my wallet and then going back to it and then realizing that it's no longer readable. So I am religious now. I just I get the receipt, I take the photo, and then I do a little tear in the top of the receipt that reminds me that I've already taken the photo.
Absolutely. And then that's record keeping as well.
And then
you've got the
integrates
record
directly into Xero, right?
That's correct.
Cool.
But then you've got the record of it as well. It's digital. You can throw out the physical receipt,
I get rid of it.
You've got the receipt. So
yeah, it's awesome.
Yeah.
Go on, Smash.
Oztix implemented last year a thing called Employment Hero, and that's been really fantastic, game changer for the business. When you've got many employees, obviously, it just makes life so much easier, and it's pretty cool because Jen talked before about having all those policies. Well, you actually can load all those policies up into Employment Hero, and people have to read them and tick off that they've read them, which makes a record of who's, everyone's complied to reading the policies. And also you can use it to manage all sorts of things like risk and all sorts of things. So it's really, really good. Yeah.
There's a question in the chat for Emma. How do I determine what expenses are deductible? Does Xero or MYOB help with this?
So Xero or MYOB don't. They're just the software that you use to input everything. If you've got something that you're not sure about, first of all, I would reach out to your accountant. Oftentimes they would be real, if it's just a quick email saying, hey, I'm about to buy this, is it deductible? Oftentimes they can just get back to you saying yes or no. Sometimes, and I'm not ashamed to admit this, sometimes I just Google it. I'll put in, is something deductible, ATO, and I look for the ATO proper website, not the community forums, because anyone can post on that. But I would look on the ATO website to see if if an expense is deductible or not, or if I need to depreciate it or something like that. The ATO website is really, really user friendly, and if you just Google it, it'll be 9 times out of 10 it's the answer you want is the first thing that comes up.
The government had this instant asset write-off for a while now.
It's
So you
gone
can
now.
basically,
Well, not gone, but it's reduced.
it's reduced to 20 grand, I think, is it?
It was
That's
60.
correct.
It
Yeah,
was more.
so-
But anything up to 20 grand, you can buy it as long as it's for your business and claim it as 100% expense in the first year.
Yes, as long as your business is earning under a certain amount of money, I think it's $10 million. As long as your business is earning under $10 million, then it's classified as a small business, which means you are eligible for those. For writing anything off up to $20,000. If it's earning over $20,000, I think the write-off threshold's like $100. It's something really minute.
Okay.
Got a quick one for
Thank
Jen. We talked before about difficulty around shareholder being a partnership and shareholders.
Mhm.
I'm actually interested in, in terms of investment. What kind of company structures have you seen specifically where Australian companies are wanting to move into international markets, and what kind of, do they have to have a different type of arrangement if they're going into international markets, particularly if they're seeking investment from outside?
If a company's wanting to trade, say, in the US,
Well, not just trade, but we trade in the US, but then obviously part of that US thing is often looking at buyout. So do people need to think about those sorts of company structures if they're thinking about a buyout as the long-term game? Is it a different type of structure, and particularly if that buyout is coming from, say, the US or overseas?
I think it's going to be an annoying answer, but I think it will be a case-by-case basis what country you're dealing with, like if there's resident directors, resident shareholders. So I'd speak to your accountant and your lawyer about that one at the time. Sorry, Stu.
No, that's okay. But it's a bit of a Dorothy Dixer. I just wanted to plant it in people's brains, because if you are, we're all talking about Australian business here, but people who are at that point where they are looking into international markets, it can be a very different story. Whatever you've structured here will be very different to the overseas market. Yes,
I've had a little bit of experience in this space when I was a band manager. Generally, what you do is for bands, anyway, as a business, you'd set up a LLC, which is the American version of a PTY Ltd.
Yeah.
And then you would get your agent to pay the money for the tour into that account. Then you pay all your bills in American dollars. And then once you've paid your tax, you bring the profit back over at a time when the interest rates are good, you know what I mean? Or you leave the money over there for the next tour. So It's kind of like, it's not hard to do, and you just get a lawyer you need a lawyer to set it up for you.
Do check with your accountant though before you do that, because there are certain rules about making money overseas and then bringing it back into Australia and making sure that it's, sometimes there are double tax agreements, sometimes there aren't. There are rules in Australia about bringing overseas profits back into Australia. So before you go ahead and do that, make sure that you understand exactly what the rules are, so that you're, not being taxed, or that everything's, as it should be. Just as a
No worries.
Excellent. Unless there are other questions, we have hit our time limit, and I do try the very best to keep these on time, so that the next time you turn up, you know what to expect, and you know that it's going to be rapid fire, and we are going to stick to the time frame, and you're going to come away with a heap of information. So I would just like to ask you if you could take your microphones off and just give a little bit of a clap for the good people who came along here today. Thank you, Emma. Thank you, Jennifer. And thank you, Smash, for your wisdom and your insights. And I look forward to seeing you at the next one. I will quickly add, Big Sound next week. If anyone is coming, come and say good day. We have the forum on the Tuesday afternoon. We have drinks on Thursday, just prior to the 20th birthday anniversary of the Oztix empire that is continuing to grow. And we're around. We're open for business. We're keen to meet up with you. And if you've got a friend who should be a member of the ALNBC, absolutely bring them along and get them signed up. We're here to represent you. And do you have anything to add as the sign off? Are you right? You're good. Okay.
All good. Thanks, everyone.
And go and check out the new website. All right. Thank you. Love your work,
Thanks.
everyone. Thanks a
Bye.
lot.
Thanks for playing hard.
Cheers.
Bye.
Nice.
I don't think he's really there.
He's just
I think
prepared.
he's just run off.
He has. That was good, Stu.
Yeah, I just got rid of him. Yeah, it's good. On time.
Yes, nice work.
Smashed it.
Cool.
All right. And on to the next thing.
Yes.
Oh, how are you, mate? All right?
I'm good. Really
Yeah.
good.
Got it all under control. How's the office?
Absolutely awesome. People are really busy, but really vibed and
Yeah.
happy. And yeah, it's fun.
So you still have a ticket to go to Auntie Donna, or has Claire got rid of yours?
I'll ring Claire on the way. I think she gave it to Gracie.
Yep. Well, I've got two.
Yeah, but Mandy and I have to do this ABC thing.
At ABC.
Don't know. I'm finding out where
Okay.
it is and if it's.
Well, let me know if you're not around. I'll palm it off to I'll bring someone else along.
Yeah, I'll let you know straight away.
Yeah, no stress.
Beauty, mate. Well done.
I'm going to flick around our voice statement pretty shortly. I've been carving away at it and trying to get it right. So awesome. Good hey? Let's
Good
go.
work, mate. All right. See
All
ya.
right, see you later, mate. Bye.